Massive. Institutional secretly dumping BTC. This $87K price is a scam. What is up, gang? Seriously, what is up? What we just witnessed this past weekend was not a financial market, it was a financial abattoir. A straight-up extreme liquidation machine, engineered with surgical precision to extract every last dollar from the pockets of the unprepared, the over-leveraged, the hopeful dreamers who believe the hype without checking the receipts. Look at these numbers. Don't just glance at them. Feel them. They are not just cold, hard data on a screen. They are blood-soaked receipts from the weekend's brutal battleground. This was a calculated massacre, gang, and if you weren't paying attention, you might have missed the warning signs that were flashing bright red. Let's rewind the tape. Just last Friday, Bitcoin was sitting pretty, teasing us, flirting with a massive breakout above $91,000. The air was thick with FOMO, 100K by Christmas. They shouted, "The moon is the limit!" But then, the trapdoor swung open. What happened next was a controlled demolition. The price didn't just dip, it fell off a cliff like a bungee cord snapped, plummeting from nearly $91,000 all the way down to a devastating, soul-crushing $80,000. That's almost an $11,000 free fall. In a single, brutal day. How many of my brothers and sisters, those who were long, those who were seduced by the siren song of reckless leverage, had their entire life savings, their margin accounts, their hopes and dreams, utterly wiped clean at 81K, 82K? We're talking about hundreds of thousands of liquidations, gang. This wasn't a correction. It was an execution. But then, the plot twist, straight out of a classic Wall Street horror movie. Just as you were deleting your trading apps, just as you were ready to rage quit this insane market for good, the manipulators hit the reverse button. Bitcoin, like a puppet on a string, snapped back. From the ashes of $82,000, it clawed at its way back to $85,000 on Saturday. Then, defying all logic, it surged to $87,000 by Sunday. And by Monday, it even kissed $88,000. As I record this video for you right now, the price is stubbornly, almost arrogantly, clinging to the $87,000 mark. Let me be perfectly clear about what this means. They cut your leg off on Friday, and on Sunday, they offered you a single candy. They systematically killed the longs, then they turned around and squeezed the shorts into oblivion. And now? Now we are left hanging, suspended at $87,000, with nowhere to go. Just dangling off a cliff in the cold, unforgiving wind of uncertainty. This, my friends, is not trading. This is a highly sophisticated, high-stakes setup, a masterfully designed trap to lure the last of the retail money into the slaughterhouse before the real storm hits. I see the questions flooding my DMs. Prophet, is this V-shaped recovery the real deal? Is the new bull run starting right now? Since it couldn't stay down, is $100,000 our inevitable next target? Gang, I am not going to sugarcoat this for you. I have spent the last 48 hours glued to my screens, analyzing the extreme K-lines, deciphering the latest cryptic moves by the Federal Reserve's old foxes, and tracking the most recent on-chain capital flows that tell the real story. I'm not here to tell you what you want to hear. I'm here to give you the harsh, ugly, unvarnished truth. And the truth is this. The $87,000 price point right now is infinitely more dangerous than the $91,000 peak was last week. This is not a steal. This is not a discount. This is the final, eerie calm before the real biblical storm makes landfall. They exploited the weakest, thinnest liquidity of the weekend to artificially pump the price back up, specifically to manufacture the illusion of strength, to create a siren song that would entice you, yes, you, to rush in and buy the absolute top. Today, we are ripping off the bloody Band-Aid. We are stripping away the layers of hype, the empty promises, the mindless chatter, and we are looking directly behind these deceptive green candles. Are we hiding a trove of gold? Or is this a fully cocked, half-raised sickle waiting to fall? I am going to show you the evidence, the data, and all my receipts right now, proving beyond a shadow of a doubt why you need to strap on your helmet and practice extreme caution. But before we dive into the abyss, let me remind you of our one non-negotiable rule, the mantra that has saved this community millions. The trend is your friend until it's not. Be early, not wrong. Let's dive in. Let's address the elephant in the room head on, the sheer, unadulterated weirdness of this price action. What we are witnessing is not organic market movement. It is a carefully orchestrated illusion. First, let's autopsy Friday's dump. That catastrophic plunge from $91,000 to $80,000 didn't happen in a vacuum. It came with massive, earth-shattering volume. That volume scream tells us one thing and one thing only: institutional level selling. This was not a bunch of scared retail investors hitting the sell button. This was the big boys, the whales, the funds, the entities with portfolios larger than the GDP of small nations methodically offloading their positions at the very top of the market. They were taking profits, and they were doing it in a way that would maximize panic. According to every textbook on market logic, that kind of selling pressure, that kind of dumpido should take weeks, maybe even months, of consolidation and sideways trading, what we pros call a breathing cycle, to properly digest. The market needs time to heal from such a wound. But what happened instead? Saturday and Sunday arrived with no major positive news, with no fundamental catalyst. The price just floated back up. And I want you to note my choice of words carefully. Floated. It didn't rally with conviction. It drifted upwards like a feather caught in a thermal. Suspicious. I dug into the data. I checked the weekend trading volume. And what did I find? Compared to Friday's carnage, the volume during this recovery was extremely, dangerously thin. What does this scream to any professional trader? It screams that this rally lacked institutional participation. The smart money was nowhere to be found. This bounce was fueled by two things. One, retail FOMO, the very people who got liquidated on Friday, now chasing their losses with fresh money. And two, the mechanical, soulless machinations of the options market, which we will dissect in terrifying detail next. Now, let's tear down the facade. The $87,000 floor isn't built on rock. It's propped up by three fragile lies, three ghost stories stealing your future profits. The technical trap is blaring sirens. We rallied back to $88,000, but we failed miserably to break through the previous high of $91,000. This technical pattern is textbook. It's the classic, time-tested signature of either a double top reversal pattern or, even more sinister, a fake-out top specifically designed to lure in the late money, the investors who always show up to the party just as the police are about to raid it. Right now, at $87,000, the market is conducting a cruel stress test. It's testing the speculative buyer's willingness to chase. It's asking, how much more are you willing to pay for an asset that just proved it can lose over 10% of its value in a single day? If the speculative buyers fail this test, it will crack the $80,000 floor that everyone thinks is solid, and it will send us spiraling down into the $70,000 range faster than you can say, liquidation. Gang, you have to understand the three core narratives, the three great lies that are providing this fragile, temporary support for Bitcoin at $87,000. These narratives are not just misleading, they are actively taking out all the future upside potential by creating a fantasy land that is destined to collapse. First is the crazy Fed rate cut bet the market is making. The market is behaving as if the Federal Reserve is Santa Claus, about to parachute out of a helicopter and hand out free money. Following some recent, slightly softer employment data, the betting markets have gone insane. The odds of a Fed rate cut as soon as December have sudden spiked to an unbelievable 81%. Everyone is piling their chips on Papa Powell, opening the liquidity floodgates and making risk assets like Bitcoin moon. But here is the reality check. And it's a cold bucket of water. You are forgetting that this is just a bet, a gambler's wishful thinking. The Fed is massively divided right now. The hawks, the inflation fighters who still remember the horrors of the 1,970 seconds, have a very loud and powerful voice within the committee. This entire rally from $80,000 to $87,000 is built on a speculative gamble, not on a concrete decision. It's a castle built on sand. If the next CPI inflation report shows even a tinny rebound, or if a powerful Fed official like Waller or Bowman comes out this week and pours some cold, sobering reality on this party, that 81% expectation will collapse instantly. The only narrative pillar holding up $87,000 will vanish into thin air. That, gang, is a huge gathering headwind that nobody at $87,000 wants to talk about. Second is the options market gamma squeeze. This is where the game is truly played, and this is where you need to listen with the intensity of a hawk hunting its prey. This weekend's move was option-driven, not cash-driven. Let me break down this black magic for you. When the price crashed on Friday, a wave of retail traders, thinking they were smart, piled into puts, options contracts that bet on the price falling further, short selling. They thought they were riding the wave down. But the institutions, the market makers, are not stupid. They are sharp, sophisticated, and ruthlessly manipulative. In the weekend's low liquidity environment, where it takes very little money to move the price, they used minimal funds to gently nudge the price back up. First past $84,000, then past $85,000. Here's where the trap was sprung. As the price crossed those key levels, all the retail short sellers' automatic stop-loss orders were triggered. Their stop losses, which are essentially buy orders to close their shorts, automatically executed. These forced buy orders became the rocket fuel that propelled the long positions higher. This is what we call a gamma squeeze. You were not riding a healthy bull. You were literally riding the liquidation of your neighbor. You were profiting from their financial destruction. This type of rally, built on the corpses of short sellers, has zero fundamental staying power. It's a sugar rush. Once the squeeze is exhausted, once there are no more shorts left to liquidate, the momentum dies a sudden death. And look where we are now. Frozen, stagnant, stuck at $87,000 with no real buyers left. The music has stopped, but everyone at $87,000 is still dancing, thinking the party is just getting started. I've been in this financial setup game for decades. And one ironclad rule has never, ever failed me. A strong US dollar kills everything. The US dollar index, DXY, is the king. As long as it remains strong, as long as global capital is flowing back into the dollar seeking safety and yield, all assets denominated in that dollar, especially hyper-speculative, risky ones like Bitcoin, are living under the sword of Damocles. No matter how much hype there is about future rate cuts, if the DXY is ticking up, Bitcoin's global liquidity pool is springing leaks. Ignore the retail flow data. I follow the smart money. And the smart money is quietly, cautiously walking away from the frenzy. The most damning evidence of all? Look at the behavior of the long-term holders, the OGs, the veterans who have held BTC for over 3 years through thick and thin. These are the players with the strongest hands, the deepest conviction. And what are they doing? They are quietly exiting the building. On-chain data from Glassnode paints a crystal clear picture. These OGs are using every single rally, including this deceptive bounce to $87,000, as an opportunity for profit-taking. They are systematically, patiently transferring their cheap coins, the coins they bought at $10,000, $20,000, $30,000, to the new, excited, emotionally charged new money that is chasing the green candle on the screen. They are handing you the bag, gang, and they are smiling all the way to the bank. Now, let's talk about the vacuum this creates. We are now in an extremely dangerous market vacuum. Above us, $90,000 acts like a massive mountain, holding the weight of billions trapped capital from everyone who bought near last Friday's top. It's a wall of pain. Below us, $80,000 is the last line of psychological defense, and if it's tested a second time, it will shatter like glass. The sideways action at $87,000 is what we call boiling the frog. The big players are not rushing to dump everything at once because they need time to offload their massive bags without crashing the player. Price. They must maintain the illusion of strength, this fake launch pad, at $87,000 to keep the retail money flowing in, dutifully converting their stablecoins USDT into the big players' BTC. This high-level distribution is a slow, silent killer. It gives you hope. It prevents you from selling. It makes you feel smart for holding through the volatility until the very moment the entire structure collapses. And you look down to realize you are holding the bag at the very top. But we are not victims here, gang. We are the risk managers. We do not gamble. We analyze. We do not chase the moon. We follow the data. I know the temptation is insane right now to buy this bounce, to jump in because you're afraid of missing out on $100,000. But our job is to position ourselves where the downside is minimal and the upside is protected. Our job is to be the hunter, not the hunted. Stop thinking about Bitcoin as a line on a chart. Think of it as a story, a hero's journey where your hard-earned capital is the hero. We were in a blissful, bullish world, ignoring all warning signs. The price was cozy at $90,000 and everyone was complacent. That was the ordinary world. But now is an adventure. The crash to $80,000 was the call. It was a violent, shocking wake-up call. It wasn't a disaster. It was an opportunity. An opportunity to find the true discount. Not a reason to run away in fear. Right now, we face the hardest challenge. Sitting on our hands. Ignoring the deafening FOMO scream at $87,000. This is the valley of the shadow of death for your portfolio. This is where discipline is forged. The risk-first strategy is our shield and our sword. Ignore the $87,000 lure completely. Our focus must be on the long-term MOAT of the asset, its fundamental value and adoption, not the short-term noise manipulated by options markets. Right now, the noise is deafening. The $90K wall resistance is the massive hurdle. Billions of dollars are trapped here. It will take a huge new inflow of institutional cash to break this. We don't see that evidence right now. The market is not ready to go through this wall. And the $80K floor support held once, mainly due to the gamma squeeze and high liquidation pressure. But a second test will be met with major institutional short selling. Prediction. If $80K is hit again, we are going to see a monster dump to $75K or lower. The golden rule is do not gamble on a breakout. I feel that primal urge in you to load up right now. You must crush it, you must wait. The entire bullish setup is built on the lie of the Fed rate cut bet. This is the catalyst that is being weaponized against you. Our actionable strategy is wait for the real discount. If you must have an entry, make it a test. Consider starting a very small, speculative initial position instantly. If we see a genuine, volume-supported bounce in the $78,000 to $80,000 range, that would indicate real buyers stepping in, not just a short squeeze. The ideal setup for a stronger entry would be a deeper drop into the $70,000 to $72,000 range. That would shake out all the weak hands, vaporize the leverage, and represent a true, honest-to-goodness discount before the next legitimate leg up in the long-term story. Cash is a position, and it's your ultimate tailwind right now. Every dollar you hold on the sidelines is not a missed opportunity. It is a bullet saved for the future fire sale. It is dry powder waiting for the true signal, not the fake out. The most dangerous headwind of all is the institution's receipts. Think about this logically. The biggest institutions in the world, the ones with the real money, are the ultimate long-term thinkers. If they are selling into this rally, and the data says they are seeing something you are not. The OG holders are liquidating. They are passing the baton, or more accurately, the bag to the new money. The institutional trap is to create a controlled melt-up environment. They need high prices to sell their multi-year holdings without crashing the market all at once. The $87,000 sideways chop is the perfect distribution zone. They are selling to the FOMO crowd, little by little, drip by drip, while the price appears stable. This high-level sideways trading is psychologically devastating because it convinces people the danger is over and the consolidation is healthy. I am challenging the consensus. Everyone and their grandmother is calling for $100,000. I am standing here, looking at the evidence and the data, and telling you that the market is structurally weak right now? This bounce is a technical phantom, a psychological manipulation, not the start of a true fundamental bull run. We are not chasing the rally, we are anticipating the drop. This is how you win. This is how you sleep soundly at night. Now, gang, let's do the most important thing we do in this community. Let's talk about the risks. I want you to trust, but verify. Everything I say, I know I can sound like an excited explorer who's just found a gold mine when I talk about the potential profits. But now, my tone changes. I am putting on my risk manager hat. My voice gets serious. I am here to protect your capital above all else. There are 3 huge risks lurking just beneath the surface of $87,000. First is the liquidity risk, the real dumpido. This weekend's rally was built on thin air and thinner volume. This means the market's foundation is structurally weak, like a building with no reinforcement bar. If a single major whale, perhaps one connected to rumors of government selling, decides to dump just a few thousand BTC, the price will fall faster and harder than it did on Friday. This is a market that lacks the deep institutional bids to absorb a genuine, determined sell-off. The potential downside volatility is extreme. This is not a joke. The biggest risk is that you can't control the execution risk, the Fed's next move. This is the biggest wild card, and you have zero control over it. The entire narrative is pinned on the Fed. If the Fed surprises the market in December with a more hawkish tone than expected, if they say, inflation is still too sticky, we are holding rates higher for longer, the entire house of cards supporting risk assets will implode. This is a macro-level headwind that will trigger a crazy, panic-induced correction across all speculative assets, with Bitcoin leading the way down. It's a sword hanging by a thread. Final is the new money exhaustion risk. The supply of dumb, FOMO-driven retail money is not infinite. We've been in a steady uptrend since October. A lot of the coins bought recently are held by weak hands. If the price lingers here at $87,000 going nowhere, these new holders will get bored, they will get impatient, they will start to sell to chase the next shiny object. Their selling pressure could easily become a self-fulfilling prophecy, causing the price to spiral lower in a cascade of disappointment. I want to be crystal clear. I am a cautious bull. I believe in the long-term future of this asset class. I believe in the technology, but I do not believe in it at this valuation and not under this precarious liquidity structure. Therefore, my positioning rule for this trade is absolutely not a bet the farm play. Your total allocation to this specific idea should be small, a fraction of your portfolio. When we get our signal, when we enter, it will be with a small, calculated position, something you can afford to hold for years. Even if it drops 0% tomorrow, and this is non-negotiable. Stop losses are sacred. They are not a suggestion. They are your best and most disciplined risk manager. Set them and respect them. And remember, cash is a position. Your current position is cash. And in this environment, that is the strongest, most powerful positioning you can possibly have. Do not be a hero at $87,000. Do not be the guy who tries to catch the falling knife. Be a disciplined hunter. Be patient. Be precise. Your patience will be rewarded with a much better entry point and infinitely lower blood pressure. The trend is your friend until it's not. Be early, not wrong. Let's bring it all home. The $87,000 price tag is a technical trap, propped up by a fragile options squeeze and an over-leveraged, speculative bet on the Federal Reserve, one that could vanish in an instant. The evidence is overwhelming. Low weekend volume, OG holders selling into strength, and a massive resistance wall at $90,000, which right now resembles the Great Wall of China. Our path forward is clear. We remain cautious bulls. We are not buying here. We are patiently, diligently waiting for the inevitable retest of lower support. We are targeting the $78,000, $80,000 range for a small, initial, tactical positioning, and we are dreaming of the $70,000, $72,000 range for a more significant opportunity. This market is designed to kill the impatient. It feeds on FOMO and spits out liquidation notices. You need to embrace the empowerment that comes from having a plan. Your discipline, your ability to say no to the crowd, is your ultimate MOAT. Now, I need you to engage with me. This is a conversation. Let me know in the comments below. What is your absolute lowest BTC price target for the next 30 days? Are you a cautious bull like me, patiently waiting for your shot? Or are you feeling the pull of the FOMO, tempted to chase the $87,000 candle? Gang, if you're in, if this deep dive analysis resonates with you, show it. Smash that like button, subscribe to the channel if you haven't already, and ring that notification bell. It tells me this is the content you want, the unvarnished truth, the data-driven analysis, the risk-first mindset. We are not just a channel. We are a community. We learn together. We navigate these treacherous waters together, and we grow our capital together. And as always, in this circus of volatility and manipulation, stay sharp out there.